In this presentation, we will take a look at employer taxes within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our practice file. You can follow along with your own company file and or use the free sample file provided by QuickBooks by searching in your browser QuickBooks Online Test Drive. We're going to go down to the Workers tab to the left and scroll down to observe our three workers. We're going to consider here the employer taxes, and when considering the employer taxes, they will generally be set up as we set up the paid payroll. QuickBooks will break out the taxes and assign which accounts will be affected by the employer and employee taxes pretty much by default, and use pretty good options which we will see as we go to the reports. As we set up the individual employees, then we're going to have to set up the payroll information, the employer taxes, again pretty standardized once we have set everything up in terms of the initial payroll process set up. The employer taxes being the employer portion of Social Security, the employer portion of Medicare. Because these taxes have more simplified kind of calculation rules, they're closer to flat taxes as opposed to the federal income tax, they can be set up fairly easy for all employees and set up a similar set of rules. The other big employer tax for the federal taxes will be the FUTA, federal unemployment tax, and it also has fairly standardized rules and therefore will be fairly standardized to set up through the payroll process, and a lot of the information for it will then be automated and be in the default settings for QuickBooks. Therefore, when we set up a new employee, there's not a lot of added information that we need to set up for the FUTA tax, the federal unemployment tax. Let's take a look at a couple paychecks and consider the employer taxes specifically by going to the accounting tab to the left. This is going to be in our chart of accounts. We're going to look at the checking account. That's where our paychecks are. If your paychecks are somewhere else, like a payroll account, you can go there. We're going to view the register. These are all paychecks for us, so we want to consider, of course, a paycheck. We're going to go down here to the first paycheck for January. Take a look at Anthony's paycheck. Selecting Anthony's paycheck and editing it will take us from the register to the payroll data input screen for Anthony's check. So here we have the hours, the rate, the overtime hours and rate to give us the gross pay, the $4,062.50. As we consider this information, the amount up top, the employee taxes, these are not the employer taxes. These are what's being pulled out of the employee. And that's the big difference. And it's really difficult to grasp for quite some time. If you think and mull over this for a while, it can be a little confusing on how the payroll works. But note that this is the gross pay. The employee taxes just mean that we're taking these out of the paycheck. So this is the amount we take out of the paycheck. Now, we mentioned Social Security and Medicare. And the reason those two are confusing is because there's an employee and employer portion, which makes it easy to confuse the two. Then we have the federal income tax, which is only an employee portion here. So then if we scroll down to the employer portion, this is what we're concentrating on here. We have the Social Security and Medicare again. Those are probably the two that we think of most clearly, because we have the most awareness of those two, employer and employee taxes, because they're also an employee tax. Therefore, we've probably seen them on our paycheck stubs, as well as if we're processing payroll, and we may have an awareness. Then all we just have to need to know is that there's an employee and employer portion. And once we grasp that and wrap our head around the fact that there's an employee and employer portion, then this becomes more straightforward and we get to have an understanding of these. The FUTA tax is a little bit more confusing because a lot of times people haven't seen FUTA, the federal unemployment tax, at all, and it's not only on the employer side, so we haven't seen it pulled out of our paycheck. We don't see it in our paycheck stub. We don't see it on our W-2s. We only see it on the employer side, and even then, we only see it usually in like the first quarter because of that low cap, of that 7,000 cap. So this is the one that's oftentimes confusing. We also don't even file for it. We only file yearly instead of quarterly. So this is the one that's a little bit unusual to most people in terms of the employer tax. These three are the major employer taxes. Note that these two, Social Security and Medicare, are going to be reported along with the employee tax and the employee portion, these two Medicares and the federal income tax on Form 941. This one, however, is broken out, and that's another reason it's a little bit different. It should be easier because we only have to report it yearly on a Form 940. So these are going to be the primary employer tax. Remember, the employer taxes are paid over and above the gross pay. In other words, we have to pay the employees this amount, and we're imagining that we came to their salary without considering taxes at all. Obviously, that's not true, but let's pretend we're imagining we pay them whatever without taxes at all. And then we're going to say, okay, now we have to take out these taxes. These are your obligation, your taxes as the employee. We're required to pay them directly. So we have to take them out and pay them directly. These are employee taxes. They're not employer taxes. They're not payroll taxes from the sense of the employer. These are items we have to pay over and above this gross pay of $4,062. And that's the thing we really have to wrap our head around. These taxes are paid over and above, and therefore our payroll taxes. They're payroll taxes that we owe that are not part of the pay of the employee, but just happen to be based on the earnings of the employee rather than our net income. And we, of course, have our net income taxes we pay as well with our whatever filing we have at the end of the year for income taxes. So this is really what payroll taxes are from an employer standpoint, are these employer taxes over and above the gross pay. So if we close this back out, then we'll take a look at a couple of reports. Reports on the left side, we will consider the balance sheet and income statement. Open up the balance sheet first, changing the dates from a 10119 to 123119, and run that report. These accounts are going to be set up by QuickBooks by default, and they're set up here. We've got the federal taxes and we have the federal unemployment. The federal taxes, the 941 account, is a liability account and includes both the employer and employee portion. So when we process payroll, we have an employee portion that we took from the employee, which is really their payroll, which we now have their money that we have to pay for their taxes. And we have our payroll taxes, which we just owe because we have employees based on their salary over and above their payroll. Both of those are included here. That includes Social Security and Medicare. So that liability is here until we actually pay it to the government. So that includes both employer and employee portion. The federal unemployment is broken out separately, the way QuickBooks is set up. And that's in essence because it's going to be paid usually it's under different rules. And we have to report that separately on the Form 940. Both federal taxes. This, however, this amount here is only a result of employer taxes, federal unemployment tax. So that's going to be a liability here. Now, if we wanted to group these differently and put them both into just one liability account, possibly, or something like that, we can change that with the cog up here and go to the payroll settings. We've seen that in prior presentations, especially with the federal income tax and the Social Security. So you can go back there and look at those options. These are the default options, which are pretty good. If we just want to change the names of these items, we can then just go to the chart of accounts and edit the names of them. Say we don't want 941 and we just want to call it, payroll taxes instead of federal taxes or something like that. Then we can go to those settings and change those settings. I'm going to right click up top and look at the profit and loss by right clicking on the tab and duplicating it. I'm going to pull the tab from the left to the right. So now we have the balance sheet on the left, new tab on the right, where we will go down to the reports on the left and then open up a profit and loss report. So here's our profit and loss. We'll change the dates from 010119 to 123119. Run that report and then scroll down in the profit and loss. QuickBooks default settings is to break out the taxes. Notice they just call them taxes here. They're under really their payroll taxes. So you may want to go in and you could change the name and call it payroll taxes. They're under a subcategory of payroll, and therefore they just put taxes and wages here. But it's nice that they broke it out. If you want to just change the name, you could change the name in the account setting. These items are just the payroll taxes, the employer taxes. They do not include Social Security and Medicare on the employee side. Those are not employer taxes. This amount for the expense represents what we have to pay over and above the gross pay. In other words, if I select the wages here, this is the gross payment amount. This isn't the check that we wrote to these employment. This is the gross pay that they earn, and it includes their payroll. So the expense of the employee's payroll taxes are included in their earnings. And then if we go back to our report, this amount then is reporting an expense that we have to pay over and above what the employee earned, over and above what they earned, including their payroll taxes, what we have to pay on top of their payroll taxes based on their wages. That's our employer payroll taxes. So when we consider payroll taxes as the employer, remember payroll taxes to us as the employer only means the employer portion, and from the sense of reporting this information on the financials, because the employee payroll is just their money that we had to pay to someone else to cover their obligations. We're going to open up then another tab up top. We'll go back up top, right click, and duplicate once again. We'll consider another report on the left side, and we're going to scroll down to the payroll reports. We're going to go down to the payroll details. So if we select a payroll detail report, and then consider the first quarter, drop down first quarter, January, February, March, run that report. And if we scroll down to the bottom, this will break out by paycheck. So we'll see the first paycheck down here for January, and we'll see the employer information being calculated on this side. So this side over here are the employer taxes, and we'll see them listed: FUTA, Social Security, and Medicare, and then California. So in other words, to read this, we have the net check that was given. This is what they actually received. Here's the gross pay, and the difference between the gross pay and the net check is what was taken out of the employee check, which is, these are the employee taxes: FIT, federal income tax, Social Security, Medicare, and California taxes. That was taken out. And then we have the employer taxes over here. So we have federal unemployment, Social Security again, but this is the employer portion, Medicare again, but this is the employer portion, and then the California taxes. You'll see a similar setup in the summary data at the bottom as well. Now let's take a look at the taxes tab. We're going to go to the taxes tab, and we're going to go to we have the quarterly and the yearly forms. So let's take a look at the quarterly forms first. These will be the 941. So if I select the 941, this is reported every quarter. We're in the first quarter. Let's view this report. Now it's great that QuickBooks allows us to do this. QuickBooks is grouping this information for us on the report, which is nice. Let's make it a little larger. And note what we have here is the Social Security and Medicare. The interesting thing here, the thing we need to understand, is this amount is including, this rate is what includes both the employer and employee portion. So when we consider just the employer portion for Social Security, for example, we would have to take this number and divide it by 2. So this 941 includes Social Security, Medicare, and federal income taxes, both employer and employee portion. So that means that this number up here is federal income tax employee stuff. This is employee taxes. This number here are wages for Social Security, both employer and employee, multiplied by a rate, which is twice the employee or employer rate, to give us the actual tax for employer and employee. Same with the Medicare. So these two items include the employer taxes, but when we reconcile it to, say, a W-2 or to the payroll items, paychecks, paycheck detailed reports, the financial statements, we got to recognize that this includes both the employer and employee portion. If we go back up top and we go back to our items, we're going to go back to payroll, back to the payroll center. We then have the annual reports. If we select the annual reports, we have the W-3 report, and that's going to represent the employee information. We also have the Form 940. The 940 is specific just to federal unemployment tax, which is an employer tax. It's only reported yearly as opposed to quarterly. So it's one that again, most people don't have a real familiarity with unless they're processing payroll a lot, because this form will come up on a yearly basis. But we need to know about it, because when it does come up, we want to be able to reconcile it to everything else that's happening. It's only for the FUTA taxes for the 940. And then the W-3, of course, does not have the employer information. So just to verify, the form that goes to the employees, if we were to view the W-2, well, The W-2 goes to the employees. The W-3 is the summary document of the information form we give to the employees. So this is kind of like the sum of all the W-2s. Notice it does not have the employer information. So just by contrast, comparing this to the Form 941, the quarterly form, note that the Social Security and Medicare, if we wanted to compare it to the 941, like if we had the 4 quarters for the 941, we could add up the 4 quarters, and it won't add up to these. It should be basically twice these in most cases, right? Because this is just the employee portion. So when we reconcile these reports, we need to be aware of that. Note that the federal income tax is going to be on the 941, but it's not an employer tax. That's going to be an employee tax, and therefore will be the same as the number on the 941, because the 941 is just the FIT is what it is. There's no employer and employee portion. These two have an employer and employee portion. Notice that FUTA is not here at all. The federal unemployment not on the W-3 because it's an employer tax. It's also not on the 941 because the IRS basically allowed us to have a separate form to calculate that only 1 time a year as opposed to 4 times a year. For more accounting information and accounting courses, visit our website at accountinginstruction.info.